Hey guys, today we'll talk about Bitcoin versus stocks. Um, if we should pick each one of them or just take both. Let's go. Bitcoin is hot right now. That alone should raise a flag, but is it bad just because of it? I would say not so fast. Let's go through the bull case for Bitcoin to understand its importance. First of all, what is Bitcoin? Bitcoin is money, a form of money, but has a big difference compared to fiat currencies such as euros or dollars, and that is that it has a fixed supply of 21 million coins. So Bitcoin is not a company and shouldn't be analyzed like one. Why does Bitcoin have value? Bitcoin has value because of its fixed supply that I was talking about. It serves as a store of value against inflation. Gold is a similar asset, but Bitcoin has competitive advantages over it, I would argue. But we'll talk about this a bit later on the podcast. It also is important to say that Bitcoin price doesn't rise magically. It is a mix of a few things. If I could sum it up, I would say it is a mix of pure speculation, first of all. So people that are simply greedy, and a mix of hedging against fiat supply rises. When the European Central Bank or the Federal Reserve increases money supply by 10 to 25% in a single year, that money will have to bleed into the economy in various ways. Bank credits, direct asset purchases, stimulus checks, you name it. This will cause certain assets to inflate in price. For example, the stock market, you can argue. And in a worst case scenario, fiat currency reputation damage. So, as of today, the US dollar is the world reserve currency. And that is at stake when they print the this enormous amounts of money every year. By the way, this can be followed if you follow M2 money supply for both ECB and Fed. M2 you can think of as the most liquid forms of money, and that can include cash, checking deposits, time deposits, money market funds, and that's pretty much it. If you take a look at the written version of this audio podcast, and you can check it in stockpickinginsights.com, you will see two images. One is from USM2, and you will see that the money supply increased, and this is only 2020. It increased by 25%. So every dollar that was in circulation around the world has increased 25% over the last year. You will also see another image from Europe, and that is also M2. What happened to it? And you will see that M2 for the euro area also increased by over 10% in a single year. So they are not falling behind on that train. And because Bitcoin has limited supply, um, there is a little inflation when new blocks are created, but increasingly less. Demand is the major force in play for Bitcoin. With a small market cap compared to gold, cash supply increasing by 10 to 25% in major countries like US or major regions like Europe, as we were talking about. And on top of all that, low interest rates pressuring the enormous bond markets, money flows into Bitcoin as a store of value. Now we will take a look at the role of each party in the Bitcoin network, and I'll sum up very briefly the roles of each one. There are two major parties in the Bitcoin network. You have full nodes and miners. Both are essential, but ultimately, full nodes have the voting power, quote unquote voting power, because there is no actual vote in the Bitcoin network, but vote is implicit. And let's start with full nodes. Go to the local electronics store, buy an Arduino or a Raspberry Pi and an external drive, then run continuously a software called Bitcoin Core on it, and there you go. You got the full node. So that's what a full node is. The software you just installed comes with very predefined rules for what transactions and blocks are valid. Just by having the full node connected to the network, it is automatically doing some work. Each node is validating transactions and blocks while keeping records, and by records we mean blockchain, updated. Both validations are done by the rules of the software you just installed. When transactions are valid, they will go into your pool of valid transactions, and that is called mempool, and will be broadcasted to other nodes. Each node is working independently in parallel. These rules are vital. Can I change them? Yes, but miners won't want to include the transactions you verified according to your standards because the block will be invalid to other full nodes when created, causing the miner to be wasting money on energy and not getting the reward. One other important embedded rule is for the full nodes to adopt the chain with most work done, and that is determined by block difficulty. It doesn't prevent temporary double spending, but that can be solved by simply waiting. There will be temporary ties and double spends when two miners broadcast a valid block simultaneously, but the blockchain eventually reorganizes itself using predefined rules. That's why merchants usually wait for a few blocks before shipping goods or rendering services paid. And then we have miners. Miners are also nodes, so they require a full node to work, but their interests are different from the other full nodes we were talking about, so they deserve their own name. They work for the network, they make blocks, and they take transactions from um, the mempool we were talking about, so valid transactions, but that aren't yet on the blockchain. They aggregate them into a block and mine it, costing energy. Because their interests are different from other full nodes, conflicts happened in the past. The most important of them, and probably the most important of the Bitcoin history as a store of value, was SegWit 2x. And miners wanted bigger blocks to make more transaction fee revenues with the same energy expenditures. This would make running a full node more expensive in external drive space, and that would centralize voting power. Again, quote unquote voting power. But the opposing majority of nodes simply did nothing, and the miners had to succumb if they wanted to make money. They could make and mine all the bigger blocks they wanted, but the majority of full nodes would simply not consider it valid. This majority of full nodes needs miners to make blocks, and miners need to make money. But the majority of full nodes will win uh, in a clash between the two. So you with your full node are quote unquote voting when you don't update your software, abiding to the original rules. So SegWit 2x was very important because it showed who has the ultimate voting power between miners and other full nodes. Let's take a closer look at the competitive advantages of Bitcoin. We already lightly touched on those, but Bitcoin, being a store of value, is competing against other stores of value, and that is historically gold. It has been the go to asset against inflation. If I buy gold, either physically or via ETFs, derivatives, I can't use it as a currency or transfer it easily. Bitcoin can, on the other hand, be easily transferred and with the help of exchanges, be used for everyday payments. So, um, two competitive advantages for Bitcoin. Gold bulls argue that Bitcoin is very volatile, thus a bad store of value, and that is true that it is very volatile. But to them, I would say two things. Gold is volatile too, if you take a look at the history of gold. And Bitcoin's market cap is 10x smaller than gold's market cap. And that um, is a plus in my view because it is easier to grow. Gold, though, has a longer proven track record of value and being tangible comforts the buyer. So I can see the bull case for gold too. What to do with all this information? Although I prefer to invest my money in individual companies every time, low interest rates and fiat supply increases, at least in part, are driving stock prices way too high for me, and that leaves me personally with no choices at the moment. The first use of Bitcoin is buying and cold storing it. This will protect your portfolio against fiat currency inflation. There's a second use for Bitcoin. I use both, and that is for everyday purchases. Exchanges such as Binance, and this is not a paid endorsement, it's just the exchange I use. They offer a free Visa debit card for you to use everywhere Visa network payments are allowed. You buy Bitcoin, you wait for enough appreciation to cover up the spread and other round trip fees, and then you use the card to pay for everyday things such as groceries and fuel. And keep in mind that Binance charges you a spread not only when you convert euros, if you are converting euros to dollars, but they also charge a spread when you buy everyday things. So they charge a spread every time there's a conversion, which is expected, but something to keep in mind. That's it for today. If you would like to check the written version of this audio podcast, you go to stockpickinginsights.com. Also, if you would like to subscribe to the newsletter, also go there too. And I'll see you next week.